Welcome back to the Generational Investors Podcast, where we explore the timeless principles of building lasting wealth. I'm your host, John Woodard III, and this week we're here with a special edition here for the 4th of July. And going in just on America's 250th birthday, I thought we might as well just go into a little bit of history of the stock market, what it's done throughout the years, and just some comparisons of how it is today versus what it was, 200 plus years ago. We thank you all for listening, and it's just me, myself today. Just thought that this would be good enough, and hopefully y'all will all agree. But get in here first. So the stock market, how did it start? What caused things? Well, back on May 17th of 1792, America, after getting the Constitution ratified and going through Revolutionary War to get our independence, the stock market was essentially shorted. It was by the name of man of William Dower. He was borrowing money to put money against bank stocks, and this was before there was really regulation or anything of things. I mean, that people were still able to put equity into different companies, and essentially things just turned sideways. It caused a panic in the market. It's one of the first panics in America, and there came 24 different merchants and brokers came together, as the legend goes, underneath a Buttonwood tree and created the Buttonwood Agreement, and that comes on May 17th of 1792. And essentially they just made the agreement to shake hands and regulate just between each other that they will be buying and selling the different stocks. And at that point, there's only 5 different stocks that could be stocks and bonds that could be traded. One of the main ones was Alexander Hamilton created debt bonds for payment back from the Revolutionary War, just because America had to borrow a lot of different debt from various countries and issue it to the citizens in order to pay for it. And there was also a few different bank stocks, the First Bank of America, and also Alexander Hamilton was a very renowned individual throughout this time. He was the Secretary of Treasury, the first ever under George Washington. He also started the Bank of New York Mellon, and that is the first publicly traded stock ever on an exchange for America. He started it in 1784, so just a few years after the Constitution was ratified. So from there, things kind of got rolling, and they agreed to do commissions for each trade, which was about a quarter of 1%. Right now, most companies, most stocks and things that you trade through a broker like Fidelity or Schwab or whatnot, there's no commission costs. So this is just something that they would be able to train hands with. And so moving forward from that, in 1817, they created the New York Stock Exchange Board, which has kind of helped formulate things and had a little bit more formal setting, because back until then, they were essentially just trading at coffee shops, at different things. But the main thing was they had an agreement where they shook hands and were only trading with each other, not such. So just 24 people, 5 stocks. Relating that to today, just a little quick comparison, there's over 2,800 stocks, individual companies being traded on the New York Stock Exchange. And from that, there is about 6,000 stocks just traded across all the different exchanges that America has to offer. And on top of that, over the counter, there's about 12,000. So things have changed a little bit. So just going from there, many different changes came. One of the biggest ones was the Dow Jones was created in 1896 by Charles Dow. And essentially that was 12 of the largest companies in America were traded in there, and then now it's turned into 30 companies. And essentially, the last company that was started on there and was there throughout all time was General Electric, and they were removed back in 2018. I think one of the reasons from that was they started doing spinoffs like GE Healthcare and GE Vernova, which Vernova's actually turned out to be a pretty good stock here recently. But before then, 1867, the stock ticker was introduced, and then in 1878, telephones were invented and put into the New York Stock Exchange. So, I mean, it's kind of crazy. The technology's moved along since then as such. And then coming into the 1900s, the SEC, Securities and Exchange Commission, was created after the crash of 1929, as most of you probably have well heard of that. We'll spend more time in another episode to kind of go into the details of that. But that's some of the other history coming in. It wasn't until 1957 that the S&P 500 was created, and that's just the index of 500 largest companies. And that is another index like the Dow Industrial Average that has come about and been the most prominent one. The Dow has been used since then, and Dow is still prominently used, but I would say the S&P is one of the main ones used for American indexes. And then after that is 1978 that the NASDAQ was created, and that was more so a tech focus, more biotech, more that kind of things. Correct me, 1971. And since then, the NASDAQ has grown from what it started at, 50 points up until 26,000 as of earlier today. And the Dow Industrial Average was another example. It started at 41 points, and now it's reached over 52,000 as of yesterday. So it's crazy to show that things happen over time. And so you might be curious. If you look right now, Bank of NY Mellon, it's been around since 1784. It was just originally the Bank of New York, but then in 2007 they merged with Mellon Bank, and so there's Bank of NY Mellon now. Anyways, they're trading about $143 a share. So you might be wondering, well, did they start off at 10 cents a share, something like that? And what really happens over time is companies will split in order. So when I say split, that means that they'll offer more shares to the public and decrease their share price. So as a shareholder, you'll own more shares, but it'll just be at less of a price. So you'll own the same amount of ownership in the company, but it'll just be more shares and less money. And so right now, looking back in history, you can't fully depict all of the stock splits and everything just because there's been different regulations and things and records and whatnot. So that was a little tough. But right now, $143 a share, they've split about 22 times since 1983. So just to give you a quick example, if the stock had not split since 1983, it'd be about $3,200 a share. And so one reason they mainly do this is just so individual investors can buy the stock at a low share price. Because how many people can own $3,200 worth of stock and one stock and then they want other one. So, anyways, that's kind of a mess on things like that. But just some other comparisons. I know I'm kind of jumping around here, but back in 1776 there was about no millionaires. True wealth was kind of shown just by owning land and whatnot. But now there are roughly around, as of 2024, 24 million millionaires, and that accounts for about 1 in 11 households. And actually, and again, I got these stats from 2024 because that was when one of the more recent ones were sent. Every day there was 1,000 newly minted millionaires in America. That's pretty impressive. This year, there's about 156 million adults that are invested in the stock market of sort, have individual companies, individual stocks, or ETFs or something of that sort, which accounts for about 58% of adults. Back in the day, there was 24, and then increase and everything over time. But one of the main things attributed to that really is just the generation of retirement accounts. And that's something we'll get into in other episodes where we actually talk a little bit about retirement accounts. But just the fact that, a doctor, a plumber, an electrician, a hairdresser, anyone like that their company offered a retirement plan like a 401k or a 403b or anything of that sort, or just they started contributing to their own individual retirement account, IRA, then they're invested in the stock market of sort. So that's something that's helped really broaden the number of people that do it, just because maybe you look at it, top 1% back years ago, decades and decades ago, would own about 90% of the stocks. And now that's helped broaden things out and just give the average individual that sort of leeway and ownership. And I think that's just helped really make things healthier for the country and just for the average American, for the economy. That's been propelling things forward. And as you can probably have seen, the stock market's been doing very well this year. And America celebrating its 250 is just a very big thing. And it's great to see us really trooping along like that. But it's just going around to some other interesting historic points. J.P. Morgan has been around since about 1823. DuPont has been around since 1802. Procter & Gamble, 1837. And Pfizer, 1849. So these are just some of the bigger companies that still exist now that have been around for ages and ages and ages. And so it's not really about them adapting over and over just to the times. It's keeping the foundation of what they have strong and sound, but also adapting and integrating those new policies to things. Bank of New York Mellon now is the largest custodial bank across the world. That means that they're managing or custodying tens of trillions of dollars worth of assets. I mean, that doesn't mean that they're managing or whatnot, but custodying that much money. I mean, that very big. I mean, and the history of these things is just unreal. So that's overall, that is just a pretty widespread history that I've put together here for markets. There's many other different things, different time points and everything throughout time that we'll definitely get into, such as Black Monday, the crash in 1987 when the stock market, the Dow Jones dropped 20-ish% in a given day. Then we'll go into 1929. Might talk about a little bit more about some of the history of the technology. IBM created put the first computers in the 1960s. There's just many different things throughout time that just the markets, the technology that people have been able to adapt to, and it's amazing just to see what things have done these days, and also just what traditions are still carried on. The bell that is rung now is originally a Chinese gong. Who knew? That's kind of random. But makes sense. It made the world know that the stock market was open. AC, the first ever building that had AC in all of North America, was the New York Stock Exchange. Who knew? Anyways, so these are just some points, some history and everything. Of course, the main points is the Buttonwood Agreement. That's really what started it. Again, May 17th, 1792. It's crazy. It's been that long, and since and just how it evolved. There's 6,000 stocks on the different exchanges. And actually, just one last thing I'll wrap up with too about the exchanges. So there's the New York Stock Exchange, and then there's the NASDAQ, and that's more of the tech-focused ones. And then there's also the CBOE, which is the Chicago Board of Exchange, and that is held in Chicago, and that's mainly options are traded on there. And then there is the CME, which is the Chicago Mercantile Exchange, and that is mainly futures and derivatives and everything like that. That's the exchanges where these things are traded. And so you might hear like the S&P 500, you might be wondering, well, isn't that where stocks are traded and everything? That's just an index that holds the 500 companies. That's just a benchmark that people look at. There's not actual trades going on throughout that. So that kind of helps, hopefully, put things kind of in clarification. Y'all been maybe hearing about the Texas Stock Exchange coming about. And that's something that's coming new. And I believe SpaceX might have actually been listed on that as well. I know also on the NASDAQ. But anyways, so there's history everywhere. It's interesting. Happy birthday, America. 250 years. It's a long time. I'm hoping. I mean, this is the greatest country the world's ever seen. It's technologically innovative and everything. Now that it's created $75 trillion worth of stock market cap throughout all those years. It's unreal. Anyway, so that's all to wrap up for this week. Just to get into the weekly pick here, I've decided to do something more on the health wind again, and that is reverse osmosis water filtration. And that's something I hope a lot of you back home have heard about, but it's something that's very crucial just in today's society with the water. People you'll look at and see and getting water filtered and everything like that, but there's so many different chemicals and traces of things, and you'll see Britas and all these different water filters, and they do filter out certain things, but there's so many. There's PFAs, or the forever chemicals that go through your body. There's leads, metals, everything, and it just, your body is an investment. What you put into it, you get out, and over time it compounds on what you do. And doing something like reverse osmosis, what it does is it essentially pushes water through these very fine membranes, and it gets about 99. A good reverse osmosis water filtration system gets about 99 to 99.9% of those bad chemicals and leads and whatnot out. And so it just helps filter the water through better than almost any water filtration sort. And it's something, the one I use, it's a Beluva is the name of it. You can get it on Amazon. It's a few $100s, and then it's maybe $100 a year for filtration change. I think it's something, it's a small investment now. And also if you buy bottled waters or whatnot, it would add up. You're spending more than hundreds of dollars a year on that, I would say. It's something, it's just a little something that adds up, and it's just, Another trick that it's not going to change the whole world, but it's just another step in the right direction that'll compound on itself and make things better. So that's one thing I just would highly recommend to anyone, because hopefully that's the number one thing that we're all consuming, water. Anyways, well, thank you all for listening. We'll see you back here in a couple weeks. And as always buy quality and diversify. Thank you. The information provided in this podcast is for educational and informational purposes only and does not constitute investment advice or recommendation to buy or sell securities or an offer or solicitation of advisory services. It does not take into account your individual financial situation, objectives, or needs. Investments involve risk, including the potential loss of principal, and past performance is no guarantee of future results. Woodard & Company Asset Management Group is a registered investment advisor with the SEC. Please consult your financial advisor or tax professional before making any investment decisions.